USDA loans may be the most misunderstood and overlooked path to home ownership in America. I'm Joel Berner, senior economist at Realtor.com. Let's clear up 6 myths about these USDA loans that may be quietly locking people out of home ownership, and one critical truth that more buyers should know. Myth number 1. You have to live way out in the country to get a USDA loan. Because these loans come from the U.S. Department of Agriculture, many people assume you must buy a farm or live way out in the country to qualify. In reality, many USDA-eligible homes are in the suburbs, within reasonable commuting distance of major metro areas. For example, Butler, New Jersey is an eligible area, and it was a simple 1-hour bus ride or train commute away from Midtown Manhattan. Myth number 2. USDA loans are only for first-time homebuyers. USDA loans are not limited to first-time homebuyers. As long as the home will be your primary residence and you live in it, it's not a one-and-done situation. If you're looking to move from one house to another, you can qualify again for another USDA loan. Myth number 3. You need a down payment to qualify for a USDA loan. One of the biggest advantages of USDA loans is that they offer 100% financing. That means no down payment is required, and in some cases, certain costs may be rolled into the loan. That means a huge upside for low-income applicants. 100% financing that includes down payment, closing costs, and prepaid charges. In fact, some eligible costs paid up front by the buyer can even be refunded and then rolled into the life of the loan. Myth number 4. The insurance costs for a USDA loan are higher than for regular loans. Another common myth is that USDA loans are saddled with expensive mortgage insurance. Usually, when someone makes a down payment of less than 20% on a home, they're required to carry private mortgage insurance. So low down payment loans have become associated with these high insurance costs, but that's not actually the case with USDA loans. In reality, USDA loans don't require you to provide private mortgage insurance. Instead, they use a guarantee fee that is specific to USDA loans. This acts as the mortgage insurance and rolls up an upfront cost of about 1% and an annual fee of 0.35%. Myth number 5. There are no negotiations of the terms with a USDA loan. There is some wiggle room when it comes to shopping for USDA guaranteed loans. Borrowers can shop with different USDA-approved lenders, and terms may vary. But if you decide to go with USDA direct loans straight from the USDA, these come with set terms that must be agreed to as is. Myth number 6. You must have a good credit score to secure a USDA loan. A strong credit score is obviously ideal, but a less than perfect score doesn't automatically disqualify you from securing a USDA loan. Because USDA loans are government-backed, lenders may actually have more flexibility than with some conventional loans. As long as you're able to prove you can afford the mortgage payments, the guarantee fee, and the government backing make it all less risky. Here's one truth that matters most. USDA loans do have income limits. Eligibility depends on your household income, household size, and where the home is located, and those limits can vary by location too. In some parts of the country, the income limit for a family of 4 is around $120,000, $119,850 to be specific, and $158,250 for a family of 5 or more. But that limit increases in areas with higher cost of living. For example, in Fort Worth, Texas, the income limit for a family of 4 is $122,700. In Elk Grove, California, that rises by over $25,000 to $147,900. That's why it's critical to check your income eligibility early, either with your lender or directly through the USDA eligibility tools before you become too invested. USDA loans aren't exactly niche, they're just misunderstood. If you're exploring home ownership, clearing up these myths could unlock a door for you that you didn't realize was available. For more expert advice on buying, financing, and navigating today's housing market, explore Realtor.com's advice section.